Wahid Invest has been in the Malaysian market for a few years now, and I know that some of you guys are already invested in it. One of their biggest draws is that they give us access to global stocks while at the same time also being Sharia compliant. But to be honest, I wouldn't say that only Muslims should invest in this, because I've been surprised. Their performance has actually been pretty good. So today, I'll go through Wahid's portfolio in detail so that you guys know what you will be investing in, as well as I'll also share my thoughts about investing with Wahid. But before we start this video, if you guys want to invest with Wahid, then use my code. I'll leave it right here on the screen, and you'll get a 10 ringgit reward once you deposit 300 ringgit with Wahid Invest. Okay, so addressing the first question that many of you guys might have, is Wahid safe to invest our money in? So the answer to the question is yes and no. Okay, so they are licensed by Securities Commission Malaysia, so meaning, they are regulated here. And in this sense, it means that they're as safe as any other platform that, are regulated by Securities Commission Malaysia. They are just as safe as any of them out there. But as with all other investments, there is a risk when you invest your money with Wahid, because, your investment can lose its value. That's just how the stock market works. So yeah, don't just take whatever I say blindly. Make sure you do your own research and see if this investment suits you. So how can you invest your money with Wahid? So the good thing is, once you sign up, the process is actually extremely simple. All you have to do is you have to select your investment style, you have to answer some questions, and then they'll propose to you a suitable portfolio that might sort of suit your risk appetite. And that's really the good thing about robo-advisors, right? You don't have to think about what to invest your money in, where you're going to invest, all those good stuff. You don't have to think about it. And if you're a new investor, I would recommend going for the regular investment style rather than the thematic one, because with the thematic style, you'll still have to choose your portfolio. You go through all 8 questions that they'll ask you, but at the end of the day, you still have to choose which asset class you want to invest your money in. So if you're someone who's new or not very well versed with investing, just go with the regular investment style. And depending on your answers to the questions that they ask you, they'll assign you one of 6 portfolio types, ranging from very conservative to very aggressive. So I've said this many times before, but generally speaking, this is not financial advice. This is just generally speaking. The younger you are, the more aggressive you would go with your investments, because we're still young, there's still a long time to go until retirement, and we can afford to go through bear markets and all those stuff. But I do know that there are some younger people who are still risk averse. They don't want to see the values of the portfolio drop. So if that's you, then it's completely fine to go for a more conservative portfolio. Just go with whatever the Wahid portfolio suggests you, and you can adjust it if you want. Just looking at their chart though, it's pretty insane that their very aggressive portfolio has a return of 207% over the last 10 years, which essentially means that if you invested with them 10 years ago, which is not possible because they weren't founded yet, but yeah, hypothetically speaking, if you invested with them 10 years ago, you would essentially triple your money. But of course, this is just based on historical returns. There's no guarantee that 10 years down the line, you will get the exact same returns. And depending on which type of portfolio you go for, you'll be invested into a different mix of funds that they have on offer. So I won't go through some of the other funds, because stuff like gold, money market funds, local REITs, I think those are pretty straightforward and I don't have to go through it, because gold, money market funds, there's nothing much to talk about, right? It's going to be the exact same thing. So in this video, I'm going to cover 3 funds: the global fund, the US fund, as well as the emerging markets fund. They also have a China fund, which is pretty interesting. It might be worth looking into, but I don't have that in my very aggressive portfolio, so I decided not to include it in this video. I guess Wahid is being smart, they see that China isn't doing so well, so they've decided to remove it from the very aggressive portfolios. First up, let's talk about the US fund. So this one is actually created and managed by Wahid themselves, and it's listed on the US stock markets under the ticker symbol HLAL or HLAL. HLAL, yeah. So yeah, since it's listed in the US stock markets, technically you could go ahead and invest in it yourself. You can go buy this ETF yourself if you wanted to, via a broker like Interactive Brokers. If any of you guys want to invest in global stocks, from the US, Hong Kong, Japan, all of those countries, then check out Interactive Brokers. I'll leave the link to sign up down below in the description. Anyway, this fund has performed pretty well ever since its inception in 2019. From my observation or from my experience, I've noticed that usually speaking, Sharia compliant funds, they tend to underperform their conventional counterparts by a slight margin, just like what we see with EPF. The EPF Sharia compliant version usually gives a slightly lower dividend compared to the conventional one. But this fund, it has managed to outperform the S&P 500 ever since its inception, as well as over the last 1 year. And this to me is impressive because S&P 500, it's usually the benchmark of what global investors want to invest their money in. It's a very good ETF to put your money there. So the fact that this ETF can outperform that over the last 5 years, that is a pretty big deal. Again, there's no guarantee that this will continue into the future forever because even 5 years is not a really long time in investing world, but we can only judge them based on how long they've been around, and so far things have been going pretty good. In terms of holdings, they're holding the usual large cap companies like Apple, Microsoft and Google, just like you would see with any other US ETF basically. And it kind of makes sense, because these are the biggest company in the US as well as the biggest companies in the world actually, and they have been dominating the stock markets, driving the price of the S&P 500 upwards. So it makes sense that these are the largest holdings in this ETFs as well. Another thing that I think makes sense for them is that these companies are technology companies, and most of the times tech companies are shariah compliant, so it's perfect for WAHID. Overall, I think that this is a pretty balanced portfolio with good exposure to multiple sectors. The only thing that I would say is I'm pretty surprised that we don't see any semiconductor stocks like Nvidia, because those companies have really exploded in 2024 and even in 2023. And I'm pretty sure that companies like Nvidia, they are shariah compliant, so that should be the reason that it's not here. So I'm not really sure why Nvidia isn't a top 10 stock in this ETF. Another thing to note is that this ETF, even though it gives you exposure to many different sectors, it does have a very big concentration into technology stocks with over 50% allocation. So right now, of course, it feels good, it's all fun and games because tech has been performing so well. But if we see a bear market and tech companies get affected like we saw in 2022, then this portfolio, it could get hit quite hard. So in this sense, I would say that this Halal ETF is more similar to the Nasdaq 100 or the QQQ compared to the S&P 500. Next up, let's talk about their global fund, which you can also invest in yourself via any broker out there, and it's listed under the ticker symbol UMMA. This one is also created and managed by WAHID themselves. I really like that WAHID decided to expand their range of portfolio, to include global stocks, because I think, if I'm not mistaken, previously it used to be only US stocks, and I wanted a bit more diversification. Of course, US stocks have been performing the best over the last 10-15 years. US stocks have outperformed every other stock market in the world basically, but nothing lasts forever, things could change, so it's nice to have a good mix in the portfolio. In terms of performance, this fund is in a negative since its inception, but I would say it's quite understandable because they started this fund in 2022, which is basically the middle of a major bear market. However, over the last 1 year, this fund is now up by 18% and has also outperformed its benchmark, which is the MSCI All World Index. Again, I would say this is impressive because for people who are looking to invest in global stocks like an ETF with stocks from many different countries, this is basically the benchmark. This is what everyone is trying to beat, and the fact that WAHID can do this shows that they've got this shariah compliant thing figured out. Despite the restrictions that they have, what they can invest in, they've still managed to perform very, very well. So looking at their holdings, you won't see the usual big cap tech companies because this ETF actually excludes US stocks. So instead of Apple, Microsoft and Google, you'll see names like Taiwan Semiconductor from Taiwan, you'll see Samsung from Korea, and also Tencent from China/Hong Kong. And since this portfolio excludes US stocks, you will see a slightly lower concentration into tech with only a 30% allocation towards it. I guess 30% is still quite high, but it's less than the 50% that we saw with the first fund. Usually when you invest outside of the US, you won't have such a huge allocation towards tech. Like you can see here, there's an over 10% allocation towards industries like healthcare and industrials. But my favorite thing about this ETF is it's extremely well balanced in terms of their country allocation. So usually with this kind of global ETFs that excludes US stocks, you'll usually see like one country completely dominating the ETF and then a smaller allocation towards all the other countries. But with this one though, the largest allocation is I think only 12%, and surprisingly to me, it's actually to Switzerland. There's also a 10% allocation to Japan, which I think is nice because I do think that Japan can continue to do well. I actually did a video about Japan. They actually hit an all-time high. The Nikkei hit an all-time high for the first time in I think like 35-40 years. So I did a video about what's happening there, how did they get here, and where I think they'll go in the future. If you guys want to watch that video, then check it out here. The final fund that I'll be talking about today is their Emerging Markets Fund, and this one is the only one that is not created and managed by WAHID themselves. It's actually done by HSBC. This fund though is also pretty new. It's only created in 2023, I think, sometime last year. So there's not a lot of historical performance that we can look at. So let's just look at the fund details. In terms of countries that this fund has invested in, I really like that it's not just extremely concentrated into China and Hong Kong. I swear, like 99% of all of these emerging markets fund just put like a bunch of money into China and then just call it a day. But this one here, it's a bit different. You'll see that the top holding is in Taiwan, and then it's followed closely by South Korea, which I do find quite surprising because South Korea is quite a big economy and usually we don't see such huge allocations to this country. So yeah, it is quite interesting. Another thing that I like is that there's also a pretty big allocation towards India, which I think is good. The stock market, the Nifty, has also been doing well, and I do think that it's just a matter of time before India becomes one of the world's largest economies. Also, there is a 1.5% allocation to Malaysian stocks, so if you guys are Malaysians, which I assume you are, then it's pretty nice, that we'll be invested, slightly into our local stocks. In fact, the FBM KLCI this year has been doing pretty well. Their biggest holding in this fund is Taiwan Semiconductor, unsurprisingly, because it is basically the biggest company in this entire region. But what I don't like about this is that the allocation is 21%, which is slightly high for just one stock. I guess they're kind of forced to do this because Taiwan Semiconductor is just so much bigger than any other stock in this region. But I just don't really like that we have such a huge allocation towards one company. Out of all three funds that I will cover, I would say that this is probably my least favorite fund, but I wouldn't say that it's bad, it's just okay. Now I want to talk about my personal experience using HIES.L. So I've used them since January 2020, and since then I've gotten a return of 49%, which is pretty good. 3 years and I've gotten 49%, that is a pretty good return. It's also funny how I invested with them right before COVID and all the lockdowns, which basically means my stocks probably got destroyed just as I invested my money. Also, ignore the wild ups and downs that you guys see in my portfolio graph. Those aren't actually movements in the portfolio itself. I've just had to withdraw quite a bit of money because there's so many apps out there that I need to test for you guys. But I do want to invest more into HIES in the future. I do think that the performance has been good, especially after doing the review for this video. So I'm only invested into a very aggressive portfolio because that's just me, that's my personality. I don't mind taking on a bit more risk as long as it means that I can, maximize my potential returns. So if any of you guys go for the very aggressive portfolio as well, you can expect a mix of, I think, 65% to US stocks, 25% to global stocks, and then 10% into emerging market stocks. I think this is okay. I would maybe prefer a bit more towards global stocks, so maybe like 35% to global stocks, 55% to US stocks. But I guess they're kind of forced into this as well. Like I said, US stocks have been performing the best out of any country out there over the last 10-15 years. So if HIES did increase the allocation towards global stocks and took away from US stocks, then the performance of this fund probably won't be so good. The final thing that I'll cover in today's video are the fees. So to me, I always say that I don't care how much fees I'm being charged. The only thing that matters to me is the performance after fees. If a fund wants to charge me 20% fees, but they give me 100% a year, then I don't really care, right? But still, I guess it's good for us to know what we're paying for and how much we're paying. For using HIES, there will be a 0.79% management fee per year that you're going to have to pay, or you don't have to pay actually, they'll deduct it from your portfolio, on top of the standard ETF expense ratios that will also be charged to us. So I wouldn't say that this is high or low, this is pretty much industry standard for all of the robo-advisors that we have in Malaysia. What I don't like in terms of fees for HIES is that they charge us a 1 ringgit fee every time we deposit via FPX or direct debit. So this means that if you set up the auto-recurring feature where you invest automatically every single month, you will be charged 1 ringgit every time you make that deposit. If you want to make a one-off transfer, then there is a way to deposit free, without any fees, and that is via wire transfers. I know 1 ringgit is not a huge amount. It's not like it's going to destroy our portfolio or anything like that, but it makes even more sense then for HIES to just absorb this fee and just make all of their clients like us happy because it's one less fee to pay. But like I said, this to me isn't a deal breaker. I still do think that HIES is one of the best options for Muslims who want to invest in global stocks. They want exposure to stocks outside of Malaysia as well. This is one of the best platforms that you can use that's also Sharia compliant. Even if you're not a Muslim, you can consider investing into HIES just because, like I've showed you guys in this video, their performance has been pretty good. So if you guys want to invest in HIES, if you guys watch this video and you guys are sold, then sign up for HIES, use my link, I'll leave it right here, and you will get 10 ringgit once you deposit 300 ringgit into the app. Thanks for watching this video to the end, guys. Give us a huge thumbs up if you enjoyed it. Let me know in the comments, do you invest in Wahid? See you guys in the next one. Peace out.